don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in circles, least of all stockbrokers.
Hey everybody, it's Lawrence from financialthing.com. It is Monday, November the 16th, coming to you with another Trading 212 5,500 pound portfolio update. See how we're doing. Now, if you watched the last update on November the 8th, 2020, you've seen the portfolio was doing rather well. We were up about 10.32% on the stock picking portfolio versus the Vanguard index tracker, which is climbing steadily, up a little bit over 6% on November the 8th. But let's go ahead and do an update on the portfolio now on November the 16th on this Monday morning before the US markets open. We did make some changes to the portfolio last week. I decided to shake things up a little bit, cut some of the losers away. So let me show you those transactions that I made right now. So I've been doing a little bit of research in the portfolio and we're going to go ahead and make some changes now. So the reasons for making these changes is I think tech is looking a little bit in the dangerous area at the moment. So I'm going to maybe move into a couple of shares that I think fundamentally might be more sound, and also a tech stock that I think is probably a better chance for some really big growth. Again, this is not supposed to be financial advice. This is purely me trying to stock pick to beat the markets, which, as we know, is a very, very difficult thing to do. So I'm going to go ahead and take some profit firstly out of this trade desk stock, which is up about 48%. I've got about 323 pounds worth. So let's go ahead and keep 123 pounds worth. So we'll go ahead and sell 200 pounds worth. Take some profit on that. There we go. Also, what I'm going to do here is get rid of these Etsy shares that are in the red, about 2.52%. The other share that I would love to get rid of is these Fastly shares, which have really been hammered since they were a high of $131 back in October the 13th and are now down to 66. But my more sensible side is saying just to hang on at this point. They're down so much that it really doesn't make any sense to get rid of them at the moment. So we're really just going to sit on those. Also going to cut Shopify loose here at a 7.6% loss. So again, I am just a regular person who is trying to beat the market. I'm doing what my emotions are telling me to do to show you as an experiment how difficult stock picking is. So we're going to go ahead and get rid of Shopify. That was one of the Motley Fool picks. It's not doing very well at the moment. If I was into a very long-term buy and hold mentality, I'm talking about 5+ years, I wouldn't be making any of these changes, but this is for entertainment purposes only, and I do have a plan on where to put this money. So let's go ahead and get rid of Shopify. There we go. That is done. So now we're going to have a little bit of room to work. So after the Shopify sale, we have about 505 pounds of capital to work with. So what we're going to do with the capital is buy some MGMI. MGMI is a technology solution company that automates the purchase and sale of digital advertising inventory for buyers and sellers. I think that online advertising is really going to be where it's at now in the future, especially so many people using the internet, and a company that automates purchasing and sale of digital advertising sounds smart to me. So let's go ahead and we're going to put a 175 pounds of our cash into Magnite today. Let's go ahead and do that. So we bought Magnite. See whether that turns out to be a good move or not. So now we have about another 330 pounds left. What should we do with that money? That's the question here. Oh, incidentally, the Magnite share recommendation came from a very experienced investor friend of mine who so far has outperformed the professional stock picking service of Motley Fool big time by suggesting the JP Morgan shares and the Lloyds Bank shares. So I went ahead and listened to his recommendation on the Magnite. The other thing I'm going to do, and my emotional side is saying, don't do this. You're buying a stock that's in the red. But I like Logitech, and it's on a discount right now. I'm in the red, about a little bit less than 4%. So I'm going to go ahead and bang another £100 into Logitech shares. For better or for worse, I hope those mouse and webcams do good for us. So let's go ahead and buy some Logitech since we are able to pick it up on a discount. So that is done. We have another £236 to spend. So I have another £236 left to invest. Today is Tuesday, November 10th. There is going to be a Apple announcement for what many think is going to be some new computers that have the in-house made Apple ARM chip. Now, the price of this announcement is probably already baked in, but I'm going to go ahead and take a gamble to say that when Apple announces these new computers, people are going to get very excited and the stock price is going to go up. Do I really know if the stock price is going to go up or down?
I don't know.
Of course not. But again, we're going purely off emotional investing and trying to beat the market. So let's go ahead and put the remaining £236 into Apple today. That's going to get us another 2.72 shares in Apple. Here we go. And there we are. We now have 12.72941103 Apple shares. And that's going to be the portfolio changes for today. So here on November the 16th, let's go ahead and run through the portfolio and see how things are going. Okay, as you can see, again, the portfolio is doing rather well. We have some vaccine news that's come through about the coronavirus vaccines that are progressing forward. The markets like that a lot because obviously we've seen a big problem with the coronavirus sort of shutting down companies, shutting down businesses, creating lockdowns, which obviously creates an issue within the economy. So virus comes along, seems to be the big answer to everything. So the markets are reacting in a very positive way today. So let's look where we are. We'll do a quick run through. The portfolio is actually up 11.17% since September the 23rd, 2020, which is a return of £616 as it stands. So you're going to see this number up here fluctuating a little bit on the return and the overall portfolio amount and the account balance. Because number one, it is about 2:20 in the UK in the afternoon, so the UK markets are open, but it's a little bit before 9:30 US time, so the US markets are not open. They're in pre-trading at the moment. And you also see some of that currency fluctuation happening in real time that happens 24 hours a day. So even when the markets are closed, if you're on trading 2-on-2 and you own US stocks, you are going to see your account balance changing as the Forex changes in the US and the UK and different currency exchange rates fluctuate. So let's get right into the portfolio and go through individually and see where we are. This is our first stock is AbbVie. This is our dividend play. And being a dividend stock, I don't expect the growth to be as good as it has been on this stock, but we are up about 9% again since September the 23rd. So performing really well. Google continues to do well, up 20.35%. We have Alteryx. This is one of our stocks that was doing really well when I first bought it. Was double-digit gains and is now struggling to stay ahead of break-even. So we're going to sit on that for a little while, see what's going on. As you can see, Apple here up 6.22%. I did put a little bit more money into Apple last week, thinking that with their announcement of the new Macs coming out, maybe the stock would see a bump, but it really hasn't moved that much. You can see over the last week, here actually has dropped off from $121 down to $119. So not really too much going on there. I may trim some of that Apple holding back at the end of the week and balance it out a little bit more. So I really didn't get the bump that I was hoping for. Blackline, this was one of our Motley Fool picks from a couple of weeks ago. It's up 8.32%, so that is doing pretty good. Next up, we have DocuSign. This stock is 7% in the red at the moment. Not really very happy with that, but again, this is portfolio building. You are going to have some winners and some losers, and DocuSign, it's not a terrible loser, but down 7%. Next up, our big loser of the portfolio, Fastly, which I decided to hang on to, even though my emotional side was saying, get rid of the damn Fastly shares. They're not doing well. You're so far behind on these now. Thing is, we really don't have many shares. We've only got a couple, and we're down about 16.21% so far, which is only 22 pounds. So again, we'll probably just sit on those for a while and see what happens to it. I think it will rebound, but it may take a while. Next up, JP Morgan Chase. This is something that we went into a couple of weeks ago. Again, 12.29% in the green, doing really well. I think JP Morgan Chase is probably a good fundamental bank pickup. You may not see a huge amount of growth on it. I'm actually surprised it's up as much as it is. But there you go. And here next, the big star of the show at the moment, and who would have thought this would be true? Lloyds Bank, up 44.5% since we bought it at around 24.5 pence. It's now 36p, and I continue to think this stock is going to rise. Again, this is not based on anything other than my gut feeling, but I think maybe a price of about 50p on Lloyds Bank is going to be the target. So I'm just going to hang on to it. We do have quite a lot of shares of this on the ratio of the entire portfolio. So 1,000, just 1,100 pounds of Lloyds Bank shares out of 5,500 pounds that we already started with. So that represents 3,110 shares. And again, there's a dividend on Lloyds Bank shares of 3.23%. And price to earnings ratio is still really very, very manageable, 8.9. So I'm just going to hang on to those for now. I think it's going to continue to rally. Up next, we have Logitech. Again, this was a share that was up big and sort of dropped off and is now coming back a little bit. We're at 7.2% in the green. Happy about that. And our new pickup this week is Magnite. We're up about 2.3% at the moment. So not really much happening, but we've only had the shares for less than, I think, about half a week. So I'm going to sit on that and see what happens. Up next is Nextera Energy. We are up 8.46% in the green. This is a dividend play. So again, performing fine. Salesforce next. Not really doing great with Salesforce. I expected this would do better, but we are at 1.69%. They were doing a lot better back in early November. Was at $270 a share, and it's now down to $249 a share. So we've seen a drop off with Salesforce. So that may be one that will change upcoming in the next couple of weeks. Up next, Sea Unlimited. This is our Asian internet platform provider that has been a absolute goldmine for some people in their portfolios. I did get in kind of late on this, but still you can see it's up 17%. I think that the right play would have been to get in, of course, when Sea Unlimited was down in this range of anything less than $100, but we got in kind of late and it still performed well. We only have one share of Sea Unlimited, so it's not going to make a huge impact on the portfolio, but a win is a win. Next, we have Tesla. We are up 3.64%. So Tesla's sort of been bouncing around. You can see here at this level. Was at $461 in October of 2020 and now down to $408. So we've definitely seen a drop off. Now I may cut back some of the Tesla holding because we're approaching on 1,000 pounds, which is a large proportion of the portfolio. And if it's not really doing well in the short term, then my game plan of this is to kind of cut it loose and see if we can find other areas of growth. But I think we're going to sit on it this week. a little bit longer, see what happens with this vaccine news. Maybe Tesla will get a bump too. And next up we have Trade Desk. As I explained before, we trimmed some of the Trade Desk fat. It was up 50% when I did that, so took some of the profit from that and invested it into Magnite. So that's where we are this week. Even in this short period of time that we've been talking, you can see the portfolio has dropped a little bit. But right now, as the markets have just opened in the US here on Monday, November the 16th, you can see the portfolio is about 10.71% in the green. So not much change from the last update that we did on November the 8th. So how is our portfolio performing against our trusty US Vanguard equity index tracker? Let's look at where we were on September the 23rd. The price was £551.43, and this is priced on November the 13th. The tracker is up to £597.73. So right now you can see the increase from £551.43 up to £597.73 is an increase of 8.39%. There was a big discrepancy when I first started of where the tracker was in performance-wise to my stock picking portfolio. Again, some of that comes out of luck, but I think it will start to even out more as time goes on. I didn't think it would happen this quickly, but 8.39% on an index tracker versus our 10% on the stock picking portfolio is starting to get more even. So well done, Vanguard. So that's going to do it for this week. Please hit that subscribe button, hit that bell so you'll be notified when new videos are released on the channel. And if you want to learn more about peer-to-peer lending, visit financialthing.com, and you can fill out your first name and email down here in this box, and I'll send you my free top 5 peer-to-peer lending company list. And if you want to learn more about peer-to-peer lending companies, you can read my reviews. And there's plenty of other information on investing in index trackers and other ways to get a return on your money. Thanks again for watching. I hope you have a great week, and I'll see you next time.